Okay, good morning everyone. Let's get right into the stock market technical analysis. We're going to just start off by looking at tech and really try to figure out where things are going. So before I get into it, guys, if you're interested in learning this as a skill set, take my stock market technical analysis course, link in the description below. Maybe, if you're not sure and you don't know if I'm providing value in that course, maybe just wait a couple days or weeks or so and let's see if this triple Qs trade plays out. If it does, I would suspect it's because of the technicals that I pointed out and that I continue to teach in my course. So follow along on that one. We'll see if I'm right there. And then the other thing is, guys, if you're interested in getting kind of a little bit more active updates on the market, then join my membership. You should see a link in the description below on how to join, or there should be a join button next to the subscribe button where you can join. And I am sending out kind of additional trade ideas. We also did the live stream on Saturday where you can bring your stock picks and your thoughts and questions. And we do a live stream, and I go through all those concepts there on Saturday. So join up if you haven't done so. I think we're providing value to those members. So finally, drop me a thumbs up and leave a comment if you guys are finding value. All right, triple Qs. So the bigger picture that I'm seeing is we've got the downtrend line to watch right there. Okay, we're slightly above it, just a little bit. I suspect that this move right in here is going to be a false breakout, and we're going to get a breakdown and aka bull trap. All right, that's what I'm looking for. That's what I'm expecting. Now, we could go a little higher from here. The 200-day SMA is right up there, sitting at about 342, and then yeah, right about there. That's about the area where we shouldn't go too much more if we're going to continue to grind higher. The price action that I've seen over the last couple of days is definitely not impulsive. It is grinding action. To me, it feels like we're just kind of setting that bull trap, and kind of popping, making these little incremental moves higher. But it's grinding action. It's not like there's not institutional participation flooding in and buying at these levels. So I think it's just a matter of how long this goes on for. We could grind around for a few more days. I don't exactly know, but again, I still feel pretty good with the technicals telling me that we're going to get that bull trap and we're going to sell down. My target right now, I'm kind of moving it because it's this uptrend line right here. And so it depends on when or where we hit that. But I think somewhere right about the 300 area right now would be the target. And, from where we're at now, if we get that, it's about a 10% drop. So that's what I'm looking for, is about a 10% drop for this short trade that we have on right now. So we'll see if that works out. I think we're going to. If I look at the hourly on the triple Qs, you can see here's the RSI. We're continuing that negative divergence. Again, look at the price action today. We're kind of grinding higher. And look at the RSI, starting to turn down again. So it's keeping the negative divergence intact. It's not able to burn through that divergence. And that tells me something. That tells me that this price action that we're seeing right now is just sucking in some bulls. And we're going to keep the divergence. Here's the PPO. Well divergence, clean divergence still, it remains. So unless it's, I know a lot of people feel like, oh, the market's super bullish. I'm hearing a ton of comments of kind of people that I don't really hear from that often, and they're just coming in, and I think they're just coming in and trolling me. And that tells me that this rally has done its job in terms of sucking in the bulls, keeping the slope of hope alive. Again, bear markets fall the slope of hope. A lot of these bulls that are in the market, they've never experienced a bear market. So they see this and they think it's just like 2020 or, going to rally and go off to new highs. And they may be right. I don't know if I'm right. Nobody knows if they're exactly right. But again, what I see is a downtrend. I see a bear market rallying into major resistance, and we're just kind of sucking in the Johnny-come-lately bulls, and we're about to roll over for the next leg lower. So SPY here, right in, resistance is just overhead. So 431, or if you look, we're just incrementally higher, just slightly higher from Friday. We're just inching up. And while we do that, you see on the hourly chart, we continue to keep those negative divergences intact. Okay, so there it is, cleanly and clearly intact as we grind higher. And it, it's just setting us up for, it's just clearly setting us up for an impulsive breakdown and a bull trap. Now, we'll see if that plays out. Nothing can guarantee it. On SPY, I'm looking for a move down to here, roughly 390-ish, somewhere right in there, on when we get that selling show up. IWM, which is the small caps, really no change from Friday. We're just right there at the 200-day. We're right there. We're just kind of popping above it. It's just grinding action. I mean, there's just nothing impulsive about the price action where we're at right now. So maybe we're consolidating for a few days and then we'll get some sort of impulsive breakout. That's possible. But as of right now, I see us right at kind of major resistance. And, when you go to the hourly, we continue to keep this divergence intact. So see here on the PPO as I zoom in, you can see here starting to make that bearish crossover as well right there. So again, it's just keeping the divergences there and grinding higher on low volume. There's just no institutional participation here. So this is basically trapping retail money, I believe. But because again, for the most part, retail are price chasers. They, when things are going up, they're bullish, and when things are going down, they're bearish. A lot of the people that have been commenting on my videos for the last couple days, you won't hear from them. If this starts to crash down, you won't hear from them. They'll just go silent. Because at the end of the day, what happens is they basically take on the losses, and then they just wait and hope that they're right in the future. So we won't hear from them, in the future if we continue lower. LLY doesn't look like this bear flag wants to play out. So kind of the alternate scenario, you kind of had two scenarios basically. One, bear flag, you flag out and then resume down. Looks like they're trying to foil that. I don't, day's not over. They could sell it off into the close. Another scenario is they do a back test of the trend line and then fail. Either way, the target is still intact down here. Maybe we go up and then down. But I still like it as a short. I don't see any reason why to exit this. And we'll just see how this one plays out. I still got a tag at the 200. Of course, that's consistent with if the market starts to sell off relatively soon. I'm thinking either this week or next we start to get that breakdown in the market. Okay, so let's move over to like gold and the dollar. So the dollar, it looks like this is DXY. Looks like we had a false breakdown right here. And that's kind of what I was thinking we were going to get. And here we've recovered the trend line. So if you guys remember last week, I talked about the potential for the dollar to see another leg higher. And we're going to get a false breakdown. And that might be consistent. If the dollar rallies here for another leg higher, that might be consistent with the stock market selling off and kind of a rush for a fear trade basically. So rush for safety in the dollar. So that looks like that's in play right now. If I go to the dollar futures, DX dollar futures right here, same deal. You can see here's our uptrend line. So we've got, support, and we broke down last week, but boom, recovered it. That's a bear trap. So that should set us up for kind of another leg higher. And again, that's consistent likely with the market selling off. So that should be bearish for gold. Gold again is at resistance. So you can see here, I've got it kind of marked all these tags of resistance. And as you zoom in, we pretty much are right there now. So until that resistance is broken, we could see another leg lower in gold. Maybe another move back down to the 1680, which is support right now. So that would be the buy zone. So again, I started to lighten up some of my miners after I saw this rally here. I took some of those positions, lightened up on some of those. If we break out, I could get back into those. Otherwise, maybe we pull that back down to support, and those miners should be down near their support areas as well. So, looking at the GDX, nothing's really broken. It could clearly go higher because bullish falling wedge, bullish divergence. We've got a breakout. It's just kind of drifting. But maybe we come in for a back test of the trend line, then we rally. Okay. that's kind of the way I'm leaning right now as we come in. These sell down, you know, hit kind of this trend line here for a back test, and then the buyers step in, and then we rally. Quick touch base on the sectors, XLY. So we did get a reaction here. You can see that we've basically got 3 tags of this trend line. We had another reaction right here. So that's a clean and clear trend line now, starting to break out above the trend line. But again, not impulsive price action. Okay, that's lesson number 1. 2, 200 days simple moving average just overhead at 175.63. So big resistance there. 3, if you go down to the hourly, negative divergence remains intact. Okay, so in general, we've got, this is a bear setup, and this breakout here to me looks like it's going to be faded and it's a bull trap. All right, and I get that because I see all the negative technicals. Price action is breaking out, but the technicals are negative, telling me this is going to be a bull trap. So that's how I have to lean as of right now. XLI. So XLI looks a little bit better in terms of breaking out, but again, my trend line wasn't as defined. On this one, I only had 2 data points, 1, 2. So couldn't cleanly say that was a, let me go back there. Couldn't cleanly say that was our trend line. Another potential trend line, because again, it's just not the cleanest chart, but another potential is maybe from the highs here, something like that. Okay, and then that would put us pretty much in the area. But again, at that point, I still just have kind of 1, maybe a little one there. Just not enough data points to validate a trend line. So I need to see some sort of another additional validation. I think if it's going to hold and reject here, then maybe we break down from here. So no trade on that one. Just wanted to point it out. XLP running into resistance. A little bit more upside to go, but basically there. And if I go, you know, that you can see is, this is basically your COVID, post-COVID trend line here. And you can see support all through here. I've got it marked out. Then once we broke with a big breakdown candle right there, big impulsive sell signal candle. Okay, that's impulsive. That's what you want to see. That tells you, okay, there's institutions that are dumping right here. And then back test 1, which was resistance, and we're right there again. So I suspect we fail. Maybe we grind around for a few days. Looking at the hourly on this XLP, and again, this is your consumer staples, but we've got negative divergence on both momentum. It's the same thing basically across the board. We're seeing negative divergence for the most part in almost all the stocks that have been rallying and the sectors. It's not quite there in XLF, but it is there in several other sectors. So, you know, I still have to stick with my short positions. You know, I don't see any indication telling me that I need to exit these things yet. If we continue higher and burn through the divergences, then that will probably, you know, I'll have to take a second look at that and say, okay, I'm probably wrong. But as of right now, still have the divergences. Everything's set up for that bull trap, so we just need to see the price action. Here's a trade idea, new trade idea. It's a short Ryerson Holdings, RYI. You know, here's what I like about it. Basically, this is coming off your COVID lows, so you've got support, 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 support. Okay, broke down and back test. All right, you're at resistance. It's objective to short right here. Again, look for little games to get played right in these areas. At, you know, when you're at such a key level, maybe they're gonna pop it just one day, you know, and then fail. That's you know, that can happen, and you just got to give it a little room if you see that. But in general, at resistance, major resistance. Looking at the hourly chart, we have negative divergence here. See the RSI starting to turn down right here. So it's helping to confirm this divergence. The PPO still has negative divergence there. Hasn't quite turned down yet. So maybe there's a little choppy, grindy action to go on for the next couple days. But in general, we're at the area of resistance. It's objective to short here. It doesn't mean it's going to work, but you know, if I had to pick go long or short, I want to short right there, all right, and give it a little room, and then I think we, you know, head lower, and most likely break down below this $18 and make our next low potentially. So another way you could do it if you want to be a little more conservative, take your hourly chart and draw out some sort of a trend line like that, and maybe wait for the break of that trend. Okay, that's a potential as well. You can, you basically want to short when you break support or rally into resistance. Right now we're into resistance, so it's objective here, although higher risk. If you wait for a break of support, it's less profit potential, and yet, you've got a little more confirmation on that. So just a trade idea. There's a trade setup, RYI. Ford coming into major resistance as well. So on Ford, you can see right there is the trend line that I have. That goes back for a while. That was resistance. Finally, we broke out and it just rallied straight up. It was support all through here. Resistance again once broken down, and we're right there again. We also have negative divergence on the daily chart on the RSI. So this new high is a divergent high on the RSI on the daily chart. So and it's slightly there on the PPO. Excuse me. I go down to the hourly, clear negative divergence on the hourly. Okay, so at major resistance, the 200 days just right there at 1665, so 30 cents above, but at major resistance, negative divergence. Again, it's objective to short here. Doesn't mean that it's going to work, but definitely objective. And this is likely going to be consistent if the market sells off as well. So it's just another, I'm just seeing it across the board. I'm seeing negative divergence pretty much across the board, rallying into resistance or just below resistance on a lot of different things. And, not impulsive price action. So to me, it seems like we're at or near kind of the end of this rally. We can go up a little bit more, kind of inch up. But again, this is just, it's picking up nickels in front of a steamroller. It's the, there's distribution going on right here, I believe, where the institutions are exiting their long positions that they've had on this rally, getting set up for the next leg lower. Or at least a 10% pullback. All right, going back to triple Qs just to wrap up. That's what we're looking for. We're looking for some sort of a breakdown and a move down to that trend line. All right, and as of right now, that's about 10% down. All right, so that's all I got, guys. Take the course, link in the description below if you're interested. That's about 4 hours or so of video trainings. I got a checklist, a trade setup checklist, all that. Join my membership. I continue to look for ways to add value and give you guys additional trade ideas and market insights. So join that. It's $5 a month, so $60. If I put you on a good trade in there, it's going to easily pay for itself. And I will catch you guys on the next video. Bye.